Hello, I'm Richard Devaney from the Tuck School of Business at Dartmouth College. Welcome to a video series of interviews that I conducted with senior executives from many different industries. The series is called Strategic Insights, and the goal is to help you to understand what great CEOs are thinking about as the critical issues of today. I'd like you to just explain a little bit about the company for the viewers.
Yeah, well, Huber is a 130-year-old private family-owned company. This is the first time, I've been the CEO role about 3 years, the first time in its 130-year history to have a board chair and CEO and non-family owned. So the company's gone through a big transition in terms of leadership. That's been quite successful. It's also gone through a transition in terms of the portfolio. So Huber, back 15 years ago when I joined the company, was maybe in 10 different business units, very diversified company. A lot of the portfolio transition has been really focusing the portfolio on businesses strategically where we felt we had a strong competitive position and could grow profitably in the future, and frankly divesting businesses where we couldn't. So what you see today in a company is a lot of focus in the what we call the engineered material space. These are largely manufacturing businesses that produce specialty high-end products. We have three major businesses in the portfolio. Huber Engineered Woods, which really serves, makes structural panels for the housing market, light commercial market. We've got a business called Huber Engineered Materials, which provides high-end functional fillers for just a wide range of industrial applications. And then CP Kelco, which was a transformational acquisition for Huber that we did in 2004, really brought us the global leadership position in hydrocolloids. These are materials that get added to a wide range of food, beverage, pharmaceutical, industrial products to improve their functionality, their stability, texturant, flavor, taste, etc. In a lot of different fields.
Of all of those businesses, what percentage of them would you say are basically having to deal with low-cost Asian entrants that are affecting the strategy of the company in a significant way?
The places where we participate that are global industries, global customer base, global competition base, we're seeing significant inroads and competition from Chinese producers. So that's probably most prevalent within CP Kelco, particularly within the biogums segment of CP Kelco. So over the last 10 years, new entrants entering these spaces, making inroads into the U.S. market, winning market share based on products that are good enough, essentially, good enough reliability, standard products that really gain share primarily through very low pricing.
What have you learned from competing with them? What strategic lessons would you like to let everybody else in on that will help them to deal with the same situation?
Well, as I said earlier, Huber is a specialty company, so our strategy at one time, before seeing immense competition from low-cost producers, particularly Chinese companies, was to stay very focused on specialty high-end. Our innovation was aimed more at product innovation. We were focused far more on growth into new application spaces, funding R&D to help drive those growth vectors into new applications, focusing on M&A strategies to expand our portfolio and capabilities. What we've learned, one of the big lessons learned, is to pay much more attention. Even if you're a specialty company, you can't ignore the standard end, low-cost, high-volume part of the market. And many times in the past, we've tended to basically cede that to low-end competition. But what we've found time and time again is competitors who enter there, build their market presence over time, gain strength, market share, financial success, don't stay in that sandbox for very long. As they become emboldened with their success at the low-end, high-volume area, ultimately they will use their profits and know-how to fund development capabilities in the higher end of the market. So one of our biggest lessons learned is even if you're a specialty producer, you've got to pay attention and erect stronger barriers in the low-end commodity side of the market. That was one of our biggest learnings.
So you try to contain them to the low end to stop them from creeping up the line.
Yeah, it's a multi-pronged attack. You might use that through fast innovation on your specialties, keep changing changing the bar, continuing to innovate, introduce new products. That's certainly an effective strategy. Intellectual property, tighter and tighter protection of intellectual property, filing of patents, investing in R&D is another barrier. But importantly, erecting more barriers in the low-end market, becoming more knowledgeable about customer decisions in that space, putting more emphasis, even as a specialty producer, on low-cost processes. So we've begun to spend more of our innovation dollars, so to speak, on process engineering and becoming even lower cost as a specialty producer. So I think it's a multi-pronged attack to really defend your business over the long run.
I noticed one theme that runs through your company is the idea of obsoleting the commodity part of the market. How do you do that?
Well, one of the ways you do it is get customers to think outside the box. A lot of times customers approach the high volume, low end in a cost per ton. They're just thinking about price. They're thinking about a transaction. So they basically want the lowest price per unit on the transaction. In terms of obsoleting that mentality and obsoleting that part of the market is getting customers to look at a life cycle cost. In many cases, our specialty end products can be used in the same applications and that low-cost standard products can be used in. The price per ton or price per pound may be high, but in the application you can use much less volumes. So a customer might pay 3 or 4 times the price, but they're using 10 or 20% of the volume. So if you can get customers to kind of look at the cost, entire total cost and use picture, understand how higher priced products can be used as substitutes, even on the low end, I think that's one of the best ways that we can obsolete their thinking and obsolete the presence of just standard low-end, poor quality products.